On Christmas Eve, global markets were rocked by a truly historic U.S. Supreme Court decision that few saw coming: the sudden overturning of Trump-era tariffs. The timing, right in the middle of the holiday season, caught investors, policymakers, and business leaders completely off guard, amplifying the shockwaves that rippled across continents. These tariffs, originally imposed under Section 232 of the Trade Expansion Act, had been a defining feature of America's economic policy for years. They affected everything from the price of raw materials to the flow of goods between nations, shaping global economic relations and sparking trade tensions with allies and rivals alike. The Supreme Court's ruling sent immediate shockwaves through financial centers worldwide. Stock futures plunged and soared in rapid succession, while major currencies swung wildly as traders scrambled to assess the new landscape. Markets from New York to London to Shanghai were thrown into turmoil, with investors trying to predict what this seismic shift would mean for global trade. This isn't just a minor policy tweak, it's a fundamental reset of America's entire trade stance. The decision signals a dramatic departure from years of protectionist measures, raising questions about the future of U.S. economic strategy and its role in the world. The sudden removal of tariffs on steel, aluminum, and a wide range of Chinese goods creates both enormous opportunity and deep uncertainty. For some industries, it means cheaper imports and the chance to expand. For others, it raises fears of increased competition and job losses. Global supply chains, already strained by years of trade wars, now face a new era of unpredictability. Business leaders and policymakers are scrambling to respond. Many have canceled holiday plans, rushing into emergency meetings to reassess strategies, renegotiate contracts, and prepare for a rapidly changing environment. The sense of urgency is palpable, as companies and governments alike try to get ahead of the unfolding crisis. The world is now watching Washington with bated breath, not for the usual political drama, but for the fallout from a judicial decision that could reshape the global economy for years to come. Newsrooms are buzzing, analysts are debating, and foreign governments are recalibrating their own policies in response. The era of tariffs as a primary tool of U.S. foreign policy may have ended overnight. This abrupt shift leaves a vacuum, forcing both allies and adversaries to rethink their approach to trade, diplomacy, and economic cooperation with the United States. The story is just beginning. As the dust settles, the true impact of this Supreme Court bombshell will unfold in the days, months, and years ahead, reshaping industries, economies, and the very fabric of global trade. The Supreme Court's 6-3 decision marked a pivotal moment in the ongoing debate over the separation of powers in the United States government. The justices examined whether Congress had overstepped its constitutional boundaries by granting too much authority to the executive branch, specifically the president, through Section 232 of the Trade Expansion Act. In their ruling, the court determined that Congress had unconstitutionally delegated its core legislative authority to the president, allowing the executive to make sweeping decisions about tariffs and trade policy, with minimal oversight or clear guidelines. This, the majority argued, undermined the careful balance of power envisioned by the framers of the Constitution. The majority opinion emphasized that the law was far too vague, effectively giving the executive branch unchecked power to impose tariffs under the broad justification of national security. This lack of specificity, they warned, opened the door to potential abuse and set a dangerous precedent for future administrations. The case, American Institute for International Steel versus United States, brought together a coalition of industries and trade groups that had been adversely affected by the tariffs. These groups argued that the president's actions had caused significant economic harm and disrupted global supply chains, all without proper congressional oversight. However, not all justices agreed. The dissent warned that the majority's decision could severely limit future presidents' ability to respond quickly to economic threats or national emergencies. They cautioned that requiring Congress to spell out every detail might hinder the government's flexibility in times of crisis. Despite these concerns, the majority's view ultimately prevailed. Importantly, the decision does not ban all tariffs or strip the president of all trade powers. Instead, it requires Congress to be much more explicit and detailed if it wishes to grant such significant authority to the executive branch in the future. Lawmakers must now carefully define the scope and limits of any powers they delegate. The era of vague national security justifications for imposing trade barriers is effectively over. From now on, Congress must set clear, precise rules, ensuring that the balance of power between the legislative and executive branches is maintained and that major economic decisions are subject to democratic accountability. The court's reasoning relied on the non-delegation doctrine, which prevents Congress from handing its core powers to another branch. Section 232 gave the president a blank check to impose tariffs, violating the Constitution's requirement that Congress regulate commerce and taxes. The statute's lack of a clear standard let the executive define national security however it wished, turning a narrow tool into a broad weapon for protectionism. The court distinguished between true national security and economic arguments, finding the latter too broad. The ruling reasserts Congress's primary role in economic policy. It doesn't judge the tariffs' merits, but clarifies who has the authority to impose them. From now on, sweeping tariffs require congressional debate and approval. U.S. businesses reliant on imports, especially in manufacturing and construction, cheered the decision, expecting lower costs and renewed investment. Consumers may see lower prices as tariffs disappear, easing inflationary pressures. However, domestic steel and aluminum producers now face renewed foreign competition, warning of job losses and plant closures. The ruling has polarized the political landscape. America First supporters decried judicial activism, while free trade advocates celebrate a return to rule of law. Congress is now the battleground for the future of U.S. trade policy. The debate over protectionism versus free trade is set to intensify. The economic and political consequences will shape the next era of American trade. The stakes for workers, industries, and consumers couldn't be higher. Global markets erupted in a wave of excitement and uncertainty as the Supreme Court's landmark decision broke, sending shockwaves through trading floors and boardrooms around the world. Investors, analysts, and business leaders scrambled to interpret the ruling's implications, knowing it would reshape the global economic landscape. In Asia, indices like the Nikkei and Hang Seng surged dramatically, with traders celebrating the prospect of smoother, more predictable trade relations with the U.S. The news was met with optimism, as Japanese and Hong Kong markets anticipated a boost in exports and renewed investor confidence. Financial newsrooms buzzed with analysis, highlighting the potential for increased cross-border investment and economic growth. Over in Europe, markets responded with equal enthusiasm. Germany's DAX index jumped, led by automakers and manufacturers who welcomed the end of tariff uncertainty. European business leaders expressed relief, seeing new opportunities to expand into the American market and strengthen supply chains. The decision was hailed as a turning point for the continent's export-driven industries. The euro and pound both strengthened against the dollar, reflecting renewed confidence in Europe's economic prospects. Commodity prices, from oil to metals, began to realign as global trade flows shifted and analysts tracked the evolving landscape. The changes signaled a broader recalibration of international markets, with investors adjusting their strategies to the new environment. Producers in Europe and Asia now enjoy freer access to the vast U.S. market, increasing competition and putting downward pressure on prices for consumers worldwide. Logistics managers and exporters rushed to capitalize on the new opportunities, while retailers anticipated lower costs and greater product variety on their shelves. The Supreme Court's decision dismantled a major distortion in global commodities, forcing markets to find a new balance. Economists predicted a period of adjustment as supply chains and trade routes were reconfigured, with some sectors poised to benefit more than others. In China, the response was notably cautious. While some tariffs have been lifted, many remain in place under other laws, leaving Chinese businesses and policymakers wary. Policy advisors debated the next steps, weighing the risks and opportunities in a still-evolving trade environment. The legal and political battle over U.S.-China trade is far from over. Negotiations continue behind closed doors, with both sides preparing for further disputes and potential policy shifts. The world watches closely, knowing that the outcome will shape the future of global commerce. For now, the world's financial centers are recalibrating to a new reality. Traders and investors remain alert, navigating a landscape transformed by legal decisions and shifting alliances as the next chapter in global trade begins to unfold. Emerging markets like Brazil, Mexico, and Vietnam stand to benefit as U.S. tariffs vanish, boosting exports and investment. Their currencies strengthened, and supply chains are expected to operate more smoothly. However, some developing nations may struggle with increased competition as trade barriers fall. The sudden shift forces every country to reassess its position in the global market. Policy uncertainty remains, as Congress could still craft new, targeted trade laws. Emerging economies are cautiously optimistic, but wary of future U.S. policy swings. The end of tariffs intensifies global competition, not just for the U.S. but for everyone. Stability is hoped for, but volatility is the new normal. The Supreme Court's decision resets the rules for global trade, reviving the case for a multilateral rules-based system. Allies see an opening to repair relationships strained by tariffs, and the WTO may regain influence. The ruling validates complaints from partners like the EU and Japan, removing a major obstacle to cooperation. It also sparks debate over what national security should mean in trade policy. Congress must now decide how to balance economic efficiency with strategic industry protection. The world faces a crossroads: return to free trade, or craft new, targeted protections through legislation. The U.S. has closed one door on protectionism, but may open another for more sophisticated trade policy. The global community is watching which path America will choose. With the shock fading, experts focus on Congress, where two camps are emerging: free traders seeking to limit presidential power, and protectionists pushing for new court-proof tariff laws. This legislative battle will shape the next election and the future of U.S. trade. Economists expect lower prices and easing inflation, but warn of tough adjustments for industries losing protection. The net impact, consumer gains versus job losses, will be closely watched. Internationally, the U.S. has a chance to rebuild trust and pursue new trade deals, yet allies remain wary of future policy swings. The key question: is this a lasting shift to rules-based trade, or just a pause in American protectionism? The world is waiting for America's next move. The Supreme Court has ended an era of broad, unilateral tariffs, shifting power from the president to Congress. The debate over globalization and protectionism now moves to the legislative arena. Concerns about domestic industry and supply chain security remain, but the legal framework has changed. The U.S. must now build new coalitions and laws that address economic anxieties and withstand judicial scrutiny. Will America return to hyperglobalization or forge a new model balancing trade and resilience? The next chapter will be written by policymakers and citizens alike. The world is watching as the U.S. charts its economic future.